Hi, in this first chapter, we'll be doing a case study analysis of the company Ashapura Intimates Fashion Limited. This was a very famous brand back in 2017-18. If you might have heard about it, it was backed by the company Ashapura Intimates Fashion Limited. Alright, so the company was into the business of designing, branding, marketing, retailing clothing products, loungewear and all those things. And everything that the company sold was mostly sold under the brand name of Valentine. Alright, so now let's go back to 2018 and see the results the company was posting back then and figure out a few reasons why the company was good enough to to make a purchase in the stock markets. So we are in 2018, as I mentioned. You can look at the financial results of the company. In 2014, the company generated a sales of somewhere about 190 crore rupees, alright, which grew to as high as around 350 crores by 2018. That's a very good growth rate of about 15% on a yearly basis. At the very same time, the operating profits, all right, so the operating profit is nothing but once you have the operating sales, you deduct for all the operating expenses, basically the cost of manufacturing the loungewear and all those things. So you deduct for all those expenses and then figure out the operating profits. That operating profit numbers were also growing very well. So the company's margins in terms of operating profits grew from 14% to 26%. Again, a very big number. We'll understand what exactly operating profits are and how do we calculate it. But for now, you need to see that the numbers are really good, both in terms of sales and operating profits. And at the very same time, the bottom line, that is the PAT or the profit that the company is generating after deducting for all the expenses, be it depreciation, be it anything else, is again on the higher side. So the company is doing really well, and you or me as an investor, will definitely would want to buy this company and generate some returns out of it in terms of stock prices as well. So let's see how the stock prices were moving. Alright, because to buy a company, we generally want some momentum in the stock price moving forward. Alright, so from 2013, as you can see, the stock was somewhere at around 95 odd rupees, and it grew to as high as 408, 450, 488 rupees by 2018. Alright, so the growth was there. The company almost grew 5x in 4 years time frame, which is a very good indication. The results are also good. The stock price movement is also good. So technically and fundamentally, everything is good with the company, and definitely, we can go and purchase the company. However, you need to understand that the information that we had might not be enough. All right, so there is more to financial statements. There's more to financial statement analysis than just the information that we went through. All right, it's not only about the sales number. It's not only about the profit numbers, but there are so many things in financial statements that you need to read, and you need to read between the lines to make an informed decision. So no wonder you need to read the statements that I went through, the profitability and the sales and all those things, to know whether a company is fundamentally sound. But at the very same time, there are other things, as I mentioned, that you need to go through as well. So a very eventful thing happened back in 2018-19. All right, a lot of news articles started coming in about the MD promoter of the company, who goes by the name Harshad Thakkar. As you can see, I'll read out a few articles for you, the headlines of it. Ashapura Intimates stock in free fall even as company's MD goes missing. All right. Owner of Valentine goes bust, says rivals played out dirty to him. At the very same time, there's one more article from DNA India that says that the lenders are now stuck with company shares. All right. So what we need to look at here is that even though there was a very good rosy picture that was being portrayed in terms of financial statements, there were a lot of things that were going behind the scenes which we could not read if we went to the financial statements superficially. We had to dig in deep to figure out these things could happen with the company. All right, so once these news started coming out, there was the stock went for a free fall, and the stock prices started to go down in a brisker. So from 488 it went to as low as 30, 25 rupees in no time. And many investors who entered the company from 2014 to 2018 did not even get a chance to take an exit from the company. All right, so now we need to understand that only the missing of the MD led to such a situation, or there were more things wrong with the company business wise and financially.
अगर आप ये वीडियो देख रहे हो तो आप जरूर किसी कंपनी को पढ़ना और समझना चाहते होंगे, और अगर ये बात सच है तो मेरे पास आपके लिए एक गुड न्यूज है। एट अपसर्ज हमने एक कोर्स बनाया है विच इज अ कंप्लीट कोर्स ऑन फंडामेंटल एनालिसिस, जहाँ पे हम काफी सारी इन डेप्थ टॉपिक्स डिस्कस करते हैं, जैसे फाइनेंशियल स्टेटमेंट्स को कैसे पढ़ा जाए, वैल्यूएशन एनालिसिस क्या होता है, और मल्टी बैगर स्टॉक्स को कैसे पिक कर सकते हैं। ये कोर्स हमने क्यूरेट किया है नमस्कार प्रसाद के साथ, जिनके YouTube पर 20 लाख से भी ज़्यादा सब्सक्राइबर्स है और उनके वीडियोस ऑन फंडामेंटल एनालिसिस बहुत ही ज़्यादा फेमस है। तो वीडियो पे वापस जाने से पहले जो लिंक डिस्क्रिप्शन में है उसे चेक ज़रूर कीजिएगा एंड डू एनरोल फॉर दिस कोर्स।
There were a few line items we took from the financial statements and the income statement of the company, and tried to figure out a trend that was there. So as you can see on your screen, you have revenue numbers in front of you, and at the very same time you have trade receivables number in front of you. So I'm hoping that you all know what revenue is. Revenue is nothing but the amount of money that you generate by selling your product. So say for example, if you're selling your product for 5 rupees and you sell 100 products, so automatically you generate a revenue of 500 rupees. All right. And one more thing that we need to understand here is trade receivables before we understand this comparison. So say for example, there's party A and party B. Party A is Kunal and party B is Somnath. Now, I am supplying my goods to Somnath. Now in that case, Somnath is not able to deliver or sell the goods to the party that is ahead in the chain. So what is happening here is Somnath will not be able to give me cash. So so all my goods will be stuck with Somnath, and I would be expecting some cash coming in from him. That is why I'll book this particular amount, the expected amount that I'll be generating from Somnath, as trade receivables and not as cash received. Alright, so that is the basic idea of trade receivables. It is basically the amount of money that you're going to receive for the goods that you have already passed on to the next person. Alright, and here, this particular amount had a very strong relation with the sales growth rate of the company. As we can see, in 2014, the sales number were around 200. In 2018, it went to as high as 345, 350 crores. Now, the sales grew at a good CAGR of 15%, alright, that we could see. But at the very same time, the growth in trade receivables was at a much faster pace. So what we need to understand is whatever sales that was happening in Ashapura Intimates, the vendors that took Ashapura's products were not able to sell it further. In case if they were able to sell it further, they would have generated cash and would have passed it back to Ashapura Intimates. But that did not really happen, and all the goods of Ashapura Intimates was stuck with the distributors and the retailers of the company. So that is one thing that we need to understand, that we need to always see, at least for goods that are fast moving, that what is the trend of the revenue growth, and at the very same time what is the trend of trade receivables. If the trade receivables are moving at a faster pace or even at a pace just above the sales growth, in that case we need to read more about the company and see what exactly is happening. It might take a bit of scuttlebutting for you, where you actually go and speak to a lot of vendors and distributors and retailers of the company and understand how exactly the situation is. But this is definitely a red flag in terms of understanding financial statements of a company and seeing how the cycle is working out for them. So when such kind of situation arises, we call this particular situation by the name channel stuffing. All right. So this is primarily done to inflate the revenue, where I'm simply passing on the goods to the next party and I'm booking my revenues here. That is what Ashapura Intimates did. All right, they booked the revenue from 200 crores to 344 crores in a very similar fashion, where they were passing on the goods to the next party and were booking revenues for themselves. All right. Now, at the very same time, if you want to see whether channel stuffing is actually happening for a fast moving good or not, look at the inventory days, the receivable days, and the payable days of the company. So, for example, inventory days is nothing but the number of days the finished good of the company or the work in progress good of the company or the raw material of the company is being held with the company. All right, so that is as high as 150 days. So the company was manufacturing goods, or the company was in the process of manufacturing goods, but the amount of days, but the number of days the good stayed with the company was as high as 150 days. All right. This generally is not the correct number of days that tend to happen with companies that are into fast moving fashion. It's pretty much on the lesser side. So 150 days was the number of days for which the goods were held with the company as inventory. Again, a very big number. The receivable days was 128 days. Basically, it indicates that the company waited for 128 days to realize cash from their distributors, retailers who sold their goods further. All right. So that is again a very big number. If you look at DMart and all other companies that are into quick businesses, you will see that the receivable days are very short. All right, it's 10 days, 12 days, 15 days, 20 days. All right. Given that this company was into clothing, you could expect receivable days of 40, 50 days, but not as high as 120 days. So you need to understand here that out of the entire 365 days that we have, 150 days, the goods were held with me. For 128 days, the goods were held with the vendors who did not pay me cash, and the suppliers from whom I took material and produced those goods. they asked for money only within a span of 23 days, and I was paying them cash in 23 days, which is very quick. So the money that is going out of my pocket was happening very faster. The money that was coming in my pocket was happening very slow. And this entire cycle, or this entire cash flow cycle that we are understanding here, is nothing but the cash conversion cycle. We'll understand more about it. What you need to understand here is 225 days is a very big time period for my money to rotate itself. All right, so that was a problem, that in 1 year's time frame they were able to rotate the money only 1.2, 1.4 times. This should not have been the case. Again, in this, both these data points indicates nothing but channel stuffing. So that was something that the company was going through, and which is not a very good sign that we need to look at, which is not a very good sign for any company for that matter. All right, now I'm hoping that you've understood channel stuffing with the simple example. I'll simply explain the processes that are there in channel stuffing by stepwise. So number one is definitely, generating or producing more number of units of goods than actually that is required, or actually there's a demand for. So this is primarily done to inflate the sales number, and then maybe increase the share price in the market. The step two is definitely overloading the retailers, distributors with more products than they can sell. So I'm giving more products to Somnath in that case, uh, given the fact that he would be able to sell a lot lesser. Step three is the recording of the sales is happening in a wrong way. As soon as the product is shipped from my warehouse to my vendor's warehouse, what is happening here is I'm recording the sales. Should not be the case. The sales should be recorded when my distributor is able to sell it further, or my retailer is able to sell it further. So that revenue recognition policy should be intact. And lastly, when everything is done, the sales figure are shown in a very attractive way, and automatically profits are also booked in a accrual way, and this all leads to inflation in the income statement, balance sheet, and then to the share price of the company. So this is something that we need to understand, and the entire process of channel stuffing leads to, after a certain point in time, return of goods from distributors, return of goods from retailers, and once that comes in, everything goes for a toss. So that is something that we need to understand, that you cannot pile on the entire pipeline and keep on pushing more products there. At the end of the day, it might simply come back. So all in all, reading the financial statements superficially just by looking at the sales number and the profit numbers is not enough. You need to dig in deeper. You need to go further and understand how things are working out, what kind of cash conversion cycle the company has, or how the receivable days are working out. And once you know all those things, that is when you can take an informed decision, whether the company is actually doing well or not. All right. Superficially, you will see most of the management talking good things about the company in the annual reports, in the financial statements, and all those things, because nobody talks bad about themselves, right? They are all answerable to shareholders, to the board, and all those people. So they would want to highlight good points, and they would like to highlight these negative points, behind those good points. So, but the financial statements, or the income statement, the cash flow statements, and the balance sheets, they will give you a truer picture once you know how to read them. So ensure that with this course, while you finish the course throughout with me, you are very well ensured how to read financial statements, and do not make a decision just by looking at the sales number or the profit numbers, because they can lie easily. They are made on accrual basis, they're made on assumption basis. All right, so make sure you do that, and I'm pretty sure you'll be able to understand these things easily once you're done with the course. Thank you.